Hello everyone, it's me Samjana Mainali and today I am here to assist you in the topic foreign trade. And firstly we have introductions to foreign trade. Foreign trade is also known as international trade or external trade, and we can define foreign trade as the exchange of goods, services and capital between two or more than two countries. Foreign trade involves the process of buying and selling of goods and services across international border, typically through the medium of import and export. For an example, if Nepal imports machinery items or petroleum product from India and export Ayurvedic medicine, pasmina, leather, etc. to India, then Nepal and India are involved in foreign trade. And next we have types of foreign trade. Basically, there are two types of foreign trade, that is import and export. Import is represented by M and export is represented by X. Export occurs when domestically produced goods and services is sold in international market. For an example, if Nepal sell pasmina or Ayurvedic product to India, then it is said to be export. Similarly, import M occurs when internationally produced goods and services is brought up in domestic market. For an example, if Nepal purchase petroleum product or machinery item from India, then it is said to be import. The difference between import and export is the balance of trade. And the balance of trade refers to the situation when import is equal to export, and it is also known as the equilibrium of foreign trade. The surplus of trade refers to the situation when export is greater than import, and it is the most favorable condition that every country involved in foreign trade desire to have. And next we have the deficit of foreign trade, and it refers to the situation when import is greater than export, and none of the country prefer deficit of foreign trade, and deficit of foreign trade reduce the foreign exchange reserve of a country, whereas surplus of foreign trade is one of the important source of foreign currency. When a country is involved in export and import, or we can say foreign trade, then it has four sector of economy. Next we have drivers of foreign trade. There are various drivers of foreign trade, and some of them are explained as below. And firstly we have globalization. Globalization refers to the increasing interconnectedness and interdependence of a country through the exchange of goods and services. Through the globalizations, goods and services produced in one part of a country can be brought and sold in next part of the world. And next we have technological advancement. Today is the world of technology, and technology has been changing very rapidly, and it has been changing the way of living. Technological advancement play a crucial role in driving of foreign trade. The development of e-commerce site, digital platform and communications tool has been facilitating foreign trade. And next we have trade agreement. There are various kind of the bilateral and multilateral trade agreement among the country that reduce trade barriers and promote cooperations. Similarly, we have comparative advantage. Comparative advantage is the ability of a country to produce goods or services at a lower opportunity cost compared to other country. When a country specializes in the productions of goods and services, then a country can produce more efficiently or at a lower opportunity cost compared to other country, and sold at the lower cost, and gain a huge amount of foreign currency. Similarly, next driving factors of foreign trade is economical and political factors. Various factors such as difference in resources, endowment, market size, labor cost, political stability, and government policy shape the attractiveness of countries for foreign trade. And economic growth, changes in income level, and fluctuation in exchange rate also impact the volume and directions of foreign trade. These were some of the drivers of foreign trade. And next we have benefit of foreign trade. There are several benefits of foreign trade, and some of them are listed as below. And firstly we have economic growth. Foreign trade can highly stimulate economic growth of a country by expanding market for domestically produced goods and services. And next we have increased productivities. When a country involved in foreign trade through the help of the concept of comparative advantage, a country can increase its productivities and sold the goods and services in the foreign country and earn a huge amount of foreign currency. And next we have access to wide range of goods and services. When a country is involved in foreign trade or international trade, then they have access to a diverse range of goods and services from around the world. The goods and services produced in one part of a country or one part of the world can be easily brought up or sold in next part of a country within a single click. And next we have economics of the scale. Foreign trade also allow country to achieve economics of scale by producing goods and services in larger quantities, and by expanding their market through export, business can also benefit from increased production level, which often lead to lower production cost per unit. And next we have exchange of knowledge and technology. As I have already told that today's is the world of technology and knowledge, and technology is rapidly changing, and with the help of knowledge and technology, a small business can also achieve huge profit margin. Foreign trade facilitates exchange of knowledge, technology, and innovations between countries. Through international trades, countries can acquire knowledge, technology, production method, and managerial expertise from trading partners. And the exchange of knowledge and technology also help in the economic growth of a country. And next we have promotions of global cooperation, which is very must when two or more than two countries are interdependent with each other. And I have already told you that globalization has been increasing interdependence among the countries, and so due to this interdependence, it is very must to foster corporations and diplomatic relationship, and to avoid situations of war or dispute. And foreign trade fostered international cooperations and diplomacy. And next we have market expansion. When a country is involved in foreign trade, then it has opportunity to sell goods and services not only within their domestic territory, but also in the international border. And next we have employment opportunity. Through the globalizations, we can see a lot of multinational companies, foreign direct investment. Due to this, there is expansion of or the improvement in the production of goods and services, establishment of trade, agriculture, service sector, industrial sector, etc., which further helps to create employment opportunity to large large populations. And next we have challenges of foreign trade. There are various challenges of foreign trade. Some of them are trade barriers and protectionisms. Various trade barriers such as quota, tariff, and non-tariff barriers can impede the flow of goods and services between the country. And such barriers has been imposed to protect domestic country from the goods and services produced by multinational countries, because the goods and services produced by small domestic company or industry cannot compete with the high quality of goods and services produced by multinational company. So to protect domestic industry, the government of a country has been imposing various kind of trade barriers such as tariff, quotas, and non-tariff barriers, which is one of the challenges of foreign trade. And next we have volatility and uncertainty. International trade is also subject to various economic and political uncertainties. Fluctuation in exchange rates, change in government policy, and geopolitical tension can introduce various volatility and uncertainty in foreign trade. And next we have trade imbalance and deficits. When two or more than two country involved in foreign trade or international trade, then it has to encounter the situations of either surplus of trade, balance of trade, or trade deficits. Though surplus of trade is desired by every country, but sometimes a country also have to face the situation of deficits of foreign trade. In such conditions, there is reduction in exchange reserve of a country, which is very harmful for the growth of a country. And next we have regulatory and legal complicity. When two or more than two countries involved in foreign trade, then both of the country must comply with regulatory and legal complicity of each other country, including custom procedure, documentation requirement, etc. And next we have socio-economic impact. While foreign trade can bring economic benefit, it can also have social and economic implications. For an example, the goods and services produced by domestic industries cannot compete with the high quality of goods and services produced by foreign country. In such situation, the domestic industry has to be shut down in long run, which is very harmful for the economic growth of a country. So it is also one of the major challenges of foreign trade. Next we have international organization in foreign trade. There are various international organizations involved in foreign trade, and some of them are World Trade Organization, International Monetary Fund, and regional trade blocs. And here in this slide we will be dealing with the future prospect of foreign trade. There are various future prospect of foreign trade. Some of them are we can see the development of e-commerce, digital trade, and the rise in service sectors in international trade. These create future prospect for foreign trade. And we can see a shift in the trade agreement, regional corporations, and multilateral negotiation to reduce tariff and non-tariff barriers, which is also the prospect of foreign trade. And in order to minimize the challenges of foreign trade and to achieve gain from the opportunity of foreign trade, or to maximize the benefit of opportunity of foreign trade, the countries or the government should focus on sustainable trade practices, climate change consideration, and geopolitical factors. And next we have Nepal foreign trade. As we know that Nepal is a landlocked country, and it is surrounded by India from three sides, that is south, east, and western side, and India from one side, that is from northern side. And as Nepal is a landlocked country, it highly depends on its neighboring country, that is India and China, for international trade, but it has also trade relations with other country too. Okay? Nepal, since last many years, Nepal has been facing a situation of deficits of foreign trade, as its import is higher than its export. The major imports of Nepal are iron, steel, machinery and equipment, vehicles, electronical appliances, chemical, petroleum product, etc. While major export of Nepal are carpet, pashmina, tea, coffee, medicinal herb, pulses, handicraft, garment, etc. And as Nepal has been facing trade deficits since last many years, it has been putting pressures on Nepal's foreign exchange reserves, and it has been affecting overall balance of payment. Nepal has been facing several challenges in foreign trade activities. Nepal is also a member of World Trade Organization and has been participating in various regional trade agreements. The Nepalese government has been also taking various initiatives to promote foreign trade and address challenges. Some of the major efforts are facilitation measures, simplifying custom procedures, improving infrastructure, promoting export-oriented industries, and seeking market access to Nepalese product through the bilateral and regional trade agreement. Despite the challenge, Nepal recognized the importance of foreign trade as drivers of economic growth and poverty reduction. Effort to enhance trade competitiveness, diversify export, improve infrastructure, and simplify trade processes are vital for Nepal to harness the potential benefit of foreign trade and contribute to its economic development. I hope this video is has been fruitful for all of you. So if you like the video, then please like, comment, share, and subscribe. Thank you. Bye bye.